Hello everybody, I'm John, this is JP Strategic Investments, and today what I want to do is dive a little bit deeper into this deal here between Xtract One and Madison Square Garden Sports. And I want to clarify some of the things from the live stream that I did, touch on the percentages that I did get a little bit wrong here, as well as do some math that I think you guys will find really interesting around the discount that MSG is getting here and what exactly could they be bringing to the table, what the value add is there. I think we can actually really just from a pure number standpoint evaluate whether or not we think, MSG is worth the discount. And, we'll show you that math in a second, but I want to go over first a couple of the things from the live stream, make sure I clarify that. The first one here, and actually let me get myself off the screen so you guys can see the sheet. First one here is these percentages. This percentage right here and this one down here are slightly changed. The formulas in my Excel sheet in the live stream were a little bit off, and the dilution for the total shares and warrants on the first tranche as well as the first and second tranche combined. This I had, I think, at about 21% or so. This I had at about 32%. I just wanted to make sure you guys saw that. I made the correction in my Discord server after I uploaded the video and I realized the error, but I just want to make sure any of you guys watching that watched the live stream hadn't seen that correction. Want to make sure that you guys get to see that. The other thing that I did forget to mention in the live stream here is on this kind of table that I have down here, and that is that there is no commission attached to this deal. And I think this is really important, might have been underestimated a little bit. Remember, if we look at the last capital raise, which I have right here, there was a 6.8% commission attached to this deal, right? And so if you look at this chart down here, right, we have 6.446 million in gross proceeds, but we have a $439,000 commission, right? That significantly reduced the amount of total net proceeds that they got from this deal. And if we apply that same percentage to what we're seeing here, for the first tranche, that commission would have been about $572,000, right? Remember, it raised about 8.4 million. With that commission, if we had a commission attached to this deal, we'd only be looking at about 7.8 million there. And if we look at the first and second tranches combined, if that second tranche does go through and gets shareholder approval, the commission would have been about 914,000, right? Almost $1 million. So you take that 13.4 that they plan on raising from the first and second tranches combined, you'd have to subtract almost $1 million from that. Now you're looking at only 12.4, 12.5 million, right? And that's pretty significant, when you think about where Xtract One is with their cash right now, with their money. I think that's something that should definitely be taken into account when we look at that. And this is kind of some of the math that we'll get into in just a second here. And one other thing that I did forget to kind of talk about in the live stream is the warrants. And I think there may have been a little confusion. I've gotten some questions. And I just want to make sure everybody understands exactly how the warrants work. I know a lot of you guys probably already do, but just for those of you that don't, really quickly, basically what the warrant does is every warrant gives the investor, in this case MSG Sports, the right to purchase one share of the company at the exercise price, which in this case, the exercise price is 60 cents here, right? And they can do that for a period of time. In this case, the period is 5 years. So what these warrants do is these 20 million that they get from the first tranche. So they have the right anytime within the next 5 years to purchase up to 20 million shares of Xtract One at a price of 60 cents. Now, keep in mind, this does bring in additional money for Xtract One, right? It's not like they just get to go out and get more shares for free, right? They're at 60 cents a piece. And so if all of those 20 million were to be exercised, that'd be another $12 million there for Xtract One. And that's just from the first tranche, right? If we look at both tranches combined, if all of those warrants were exercised at 60 cents, that'd almost be another $20 million for Xtract One, right? So there is more funding attached to those warrants. That's how they work. They're exercised at 60 cents anytime in the next 5 years. So in case any of you guys were confused about that, didn't understand exactly what warrants were, how they worked, that's what we're looking at here for the warrants, okay? So the other thing that I just want to touch on, and then I promise we'll get into that math there as far as the value of the deal, is the investor rights agreement. And I briefly touched on this in my live stream, but I didn't really have the chance to go over it in full. So I just want to give you my quick kind of thoughts on this. Most of it's pretty generic, but there are a couple important details here. First of all, the first right that this gives MSG is a right to appoint an observer to the board. Now, really important here, this isn't a voting board seat, okay? You can see here in the section that I've highlighted, I'll make it a little bit bigger, the individual to act as an observer to the board, attend all meetings in a non-voting observer capacity, okay? So it's not like we're giving MSG control over the board. This is basically a person that will just be observing, contributing. Obviously, you know, MSG is a big player in the space. They have a lot of expertise in regards to live entertainment, sports, things like that, and just also protect their investment, make sure nothing crazy happens in any of the board meetings. And also just this other section here that I thought was important. The board does have the right to exclude the observer from any portion of the meeting that could contain, let's say, proprietary information, stuff about the design of the product, things like that, that Patriot One or Xtract One, you know, doesn't want to make public and really isn't, you could say, necessary for them to show to an investor. So that's what the observer is. The next section here is basically just a way for MSG to ensure some liquidity in this investment. And that is what this demand registration, prospectus, stuff like that. Basically, this first section here, the demand registration, there's a Canadian version and a US version in case Xtract One does uplist to, let's say, the NASDAQ or something. Basically, what this is saying is if Patriot One, if MSG does want to sell some of their shares down the road, they can go to Xtract One and say, hey, put together a prospectus for us, put together an offering, and basically facilitate a sale of our shares for us if they want to sell some of their position. The reason that this is important and the reason that MSG is asking for this is because think about the volume that we're seeing on Xtract One stock right now. It's very, very low, especially in relation to the amount of shares that MSG is getting here. If MSG went to go sell even 500,000 or 1 million of their shares, which would be a very small portion of their position, you know, that would be very hard to do with the current volume, especially without the share price decreasing dramatically if they wanted to sell 1 million shares, right? So what this does is kind of gives them an avenue to work around that, and it's actually pretty beneficial to, you know, shareholders as well, because it doesn't just tank the stock whenever they want to sell some of their shares. Similar thing here with the piggyback registration. Again, there is a Canadian version and a US version. There's a little bit of a disadvantage here, you could say, for Xtract One. Basically what this is if Xtract One does decide later on to do another offering, MSG has the right to go to Xtract One and say, hey, we want some of our shares to be included in that offering. So let's say they wanted to raise $10 million. MSG could theoretically come to them and say, hey, we want $1 million of our shares to be included in that sale. And so the one downside is this could potentially reduce the amount that they're able to raise if they want to raise capital later on. You know, we'll kind of get to that a little bit later on. I don't think they're necessarily going to have to personally, but that's just what this piggyback registration is. Again, Canadian version and a US version. And then these next points here, exceptions to the demand registration, are basically just protections for Xtract One against MSG kind of abusing, if you will, these rights. And then the rest of this is really just you follow the rules, we follow the rules, you know, if you break the contract, there are consequences, et cetera, et cetera. Okay, so just wanted to go through that, make sure you guys had at least a basic understanding of what that is, what's involved in that. But now I really want to get into this math here because a lot of people, myself included, are looking at this deal and going, hey man, 42 cents, that's a pretty steep discount to what the share price is, right? The share price, at least where it was trading when this deal was announced, was right around 53 cents a share. You're looking at an 11-cent discount to the current share price. Plus, they're getting the warrants from this. Now, I'm not going to get into exactly pricing the warrants and things like that because there are a whole variety of calculations. It would take a while, and I don't think it's too important at the moment. But what I do want to go over is the amount that they're getting for a discount and what the value add is and what Patriot One, I guess, what MSG would have to bring to the table to make that worth it, right? And so I think this math actually paints a pretty good picture and gives us a really good idea of what we're actually getting here. So if we say there's 11-cent discount per share on this offering, right, on these shares that MSG is getting, for the first tranche, that would be in total about a $2.2 million discount, right, in total. So in other words, if they had paid full price, the cash raised here would be about, 10.6 million versus 8.4. And then if you take the first and second tranches combined, that's about a $3.5 million discount. In other words, it would have been around $17.1 million that they raised with the first and second tranches combined. So if you look at that discount, and I think it's important to also take into account this commission here, right? Because some of the value that this brings is because it's a strategic investor rather than a bank. We don't have that commission. So I think we should subtract that out here. And really what you got to do is you got to look at it and say, okay, do I think that this deal with MSG, as a result of this deal, if you will, because of the gained exposure, because of the sales that, in my opinion, are extremely likely to Madison Square Garden, Radio City Music Hall, all of the venues that they have, along with the exposure to institutional investors through MSG being a publicly traded company, is that value worth at least 1.6 million for the first tranche or at least 2.6 million for the second tranche? In my opinion, 100% the answer is yes. And I think another way to look at it, and what I've put here, is if we use, you guys may remember from the video I did on the Oakview Group opportunity, I'm taking here, if you guys haven't watched this video, you guys can go back and watch this video. Basically, I go through what I think the value if we were to get Xtract One protecting all of Oakview Group's different properties, which I don't think is going to be the case, but it just allows you guys to go through and figure out which ones you think they might get and kind of figure out how much that would be worth. I'm using a 30% discount to Evolve's pricing, which I think is extremely conservative there. And so using that 30% discount to Evolve's pricing, because again, we don't know for sure Xtract One's pricing on the smart gateways, this 1.6 million here is only 81 gateways worth of annual revenue. Okay, so basically, if they were to sell an additional 81 gateways as a result of the marketing and the exposure or just direct sales to Madison Square Garden, if they were to sell 81 gateways, they'd make this 1.62 million in revenue back in 1 year. Okay, and the same thing for the first and second tranches. If they were to sell an additional 130 gateways as a result of this deal, they would make that money back, this 2.6 million, in just 1 year's worth of revenue for these 130 gateways. When you look at it that way, in my opinion, this deal looks extremely advantageous for Xtract One, because in my opinion, they're going to sell far more gateways as a result of this deal. Again, I went over this in the live stream, but iconic venues here we're looking at: Madison Square Garden, Radio City Music Hall. The exposure, the experience that Madison Square Garden is going to bring to Xtract One, as well, again, as I think it is really important, the fact that MSG MSG Sports and MSG Entertainment are US publicly traded companies. Bringing that exposure to the US institutional investor, I do think is really important. And honestly, again, when you look at it this way, I think it really illustrates that this is a great deal for Xtract One, even with this discount here that MSG is getting on these shares and these warrants. So that is kind of mainly what I wanted to go over. If you guys have any questions, as always, put them in the comments below and I will get to all of those. Other than that, I hope you guys have a great rest of your weekend. Have a great day. I will see you next time.